Hello, happy Boxing Day. I'm going to practice my 3-minute speech with y'all. How many of you like to save some money? Raise your hand. How many of you would wish you were Rockefeller wealth? Raise your hand again. Today I'm going to tell you how you can be just like the Rockefellers. Right now in the United States, 95% of the trusts out there only avoid you from going to court after someone dies and then they're done with. Those are not helping you save money, save taxes, keep your information private, and keep you from being sued. That's why you need to learn about the Spendthrift Trust. What I'm going to teach you today is known by the rich, and it is legal. So I want you to pay attention. You can always reach out to me. Here are links on the website. Or you can set up a meeting with me. I do go live every Monday night, 8 p.m. East Coast time for a live Q&A. My name is Sally Marie Gimmon, and I'm the owner of thetrustisyou.com. In January, I'm going to have a podcast called Stop Paying Capital Gains Now. Now, I know many of you are like, what's a capital gain and why should I be interested in this? Capital gains are federal and some states, but I can only work with federal capital gains. So if you're in New York or California and you pay state capital gains, this is not for you. But you do pay federal capital gains. I don't care if you're in Puerto Rico, New York, or California, this is what it's going to be. Now, according to the IRS, this is a true statement, and I'm reading it straight from a slide I have. Almost everything you own and use for personal purpose, pleasure, or investment is a capital asset. What a broad statement. I mean, come on, people, what is that? Now, in the United States, there are two different kinds of capital gains. There's long-term capital gains, something that's been more than a year, and then there's short-term capital gains, something that's been less than a year. I personally, because I invest in real estate and crypto, I deal with short-term capital gains. Currently, in the United States, capital gains are 23.8% on any profit. Easy peasy. I make $1,000 on a real estate deal. I'm going to pay $238 come April 15th next year, April 15th, 2023, because we're in 2022 right now. So I would pay 23.8% on that deal. Now, if it were a long-term capital gain, it depends what's going to happen there. The truth be told, long-term capital gains, and I have to apologize, my computer's giving me messages behind the scenes, so that's what I'm trying to deal with. Long-term capital gains, there's 3 levels. 0 for nonprofits. I'm not a nonprofit. Actually, I can't be a nonprofit because of what I do. There's some other things I might be able to do with this. 0, 15%, or 20%. I am not a CPA. I have my master's in international MBA from Thunderbird, great school, had a lot of money. I paid it off. This is for your CPAs to understand. Now, for short-term capital gains, this is for any investor in the United States or someone who is investing in real estate in the United States. So let's say you're a Canadian and you have Canadian crypto account, but you have 2 apartments in Seattle, Washington, let's just say, or 2 Airbnbs in the United States. Those Airbnbs in the United States are subject to American taxes. What you're doing in Canada is not subject to American taxes. Excuse me, I had fun Christmas. So again, I want to go over what exactly we're talking here. 95% of the trusts in the United States are useless. They do not save you in taxes. They do not keep your information private, and they do not help you stay from being sued. So this is a very specialized trust. The full name for the trust, there's 5 words, so I'm going to go over each of those words. It's irrevocable, goes from generation to generation. It's complex, meaning it can hold money from day to day, month to month, year to year, decade to decade. It's discretionary. Whoever is the trustee can make the rules and make all the beneficiaries follow those rules. It's non-grantor. When you set up the trust, someone who is never a beneficiary and someone you do not invest with, because if you get in a fight, they can pierce the veil of the trust. We don't want that. Again, the law firm I work on behalf of, or myself, I could be your non-grantor. You take their social security number, and they sign up for the trust, and then they sign themselves away. And then the last one is Spendthrift. This is a very specialized, twice the Supreme Court has decided in favor of the Spendthrift Trust and is written in the tax code. If you want to be bored and want to read the tax code, it's 242 Oh, I'm gonna get this wrong for you, and I don't want to do that. Let me get the right information. Tax code 643. Thank you. I'm dyslexic, and when I don't sleep well, I don't remember things. So, tax code 643B, like Bravo. So if you are a little bit bored because of the holiday week, go ahead, read the tax code. Now, I'm not making fun of CPAs. I would never be one. I'm dyslexic and numbers are ugly to me. Not being a CPA, most CPAs have not heard of this because they don't work in the 600 tax code. Most of them are down the 300 tax code. Some of them get up to the 400 tax code. This is a very specialized tax code. Going back to the question about do you want to be like the Rockefellers? The famous quote by Nelson Rockefeller is, own nothing, control everything. So my Spendthrift Trust owns my car, owns my health insurance, owns my infinite banking policy, owns my real estate, owns my crypto, owns everything. I'm a poor little person who doesn't do very much. Now, there are two different trusts, so I have to explain this. Both trusts are irrevocable, complex, discretionary, non-grantor, spendthrift trust. The business trust is for 1099 income only. And then the beneficial trust is for any investments. I don't care if it's real estate, crypto, day trading, stock market, options, royalties, or anything else. Now, with the beneficial trust, what happens there? The 5 taxes it can help you with. Of course, there's capital gains, which is I'm talking about. Again, my podcast that's coming out in January is Stop Paying Capital Gains Now. I hope you can listen to it and subscribe because I'm looking for, it's going to be a new adventure for me. But there's capital gains. Short-term capital gains are currently 23.8% for everybody across the board. There is past legislation back in November of 2021. Congress, those 2 huge bills that they passed, there's 2 lines in it that says people making more than $400,000 a year in taxes, they will raise their capital gains to 40%. That has not happened yet, but there's past legislation saying it could happen. 40%. That's a lot of money. I think almost 0.25% of my investment is a lot of money, but 40%, that's a lot of money. So that's capital gains. That's the first one. Number 2, interest income. I don't know if I have anybody listening to this now or later who know the BRRRR strategy. Was it buy, rehab, there's BRRRR, but you buy and rehab and then you rent it out to people. One of my clients has 85 houses in Texas. His accountant was charging him interest income. Because of the interest income, and I do notes, so I buy the mortgage on the house and people pay me. That's interest income. So BRRRR strategy and interest and note strategy, that comes off taxes. This gentleman was working full-time in IT profession and then 20 hours at the tractor store and had 85 houses. What the heck is he? Why is his accountant making him work 60, 70 hours a week when he is a real estate investor? That's insane. So we were able to help him. He started his, when we looked at everything, in 2021, he had paid $154,000 in interest income. Because he started the trust, all of that goes away. So he's very happy about that. Why was I telling you this? Oh, okay. So there's capital gains, there's interest income, dividend income. Another one of my people has it's not in his 401k. So please time out. If you're doing your 401k, don't worry about the Spendthrift Trust now. When you cash out your 401k, then let's talk. But one of my clients, inherited a bunch of money from his family in stocks. He continues to do it. Last year, 2021, he paid $89,000 in dividend income. He's got some great stocks. He was telling me he's got Disney, he's got Time Warner. What else did he have? Something I never heard of before. But he's making good money on this. We sat down with his I don't know what you call his broker or whatever, and we just explained that we're going to change the accounts over from his personal name into the trust name. There was a little bit of paperwork. Yes, it was not easy peasy. There's a little bit of paperwork. She had to follow through the paperwork and everything else, and we used March 1st, 2022 as a date. So he's saving all that money from March 1st until December 31st, 2022. All of that is being saved for him right now. So that's capital gains, interest income, dividend income, rent rolls. I'm a real estate investor. I used to be in Alliance in Phoenix, and now I'm in Team Elevate out of Tennessee. I don't care what you're doing. If you're doing short-term Airbnb, if you're doing long-term rentals to traveling nurses, if you're doing long-term rentals, if you're doing buy and hold of real estate, if you're in a REIT or anything else, all that rental income goes to the trust and saves you taxes on that information. So there's a lot of money involved there. One of my friends who's in the trust, I won't use his name, he has 7. Whoops, I got to do my fingers right. He has 7 Airbnbs all over Phoenix and Tucson. Also up in Jerome, Arizona. If you don't know that, it's a wonderful place. Mingus Mountain. He makes fantastic money. I mean, his how he has it all. His Excel spreadsheet on each one of his rentals. If he rents it out, his short-term rentals, his Airbnbs, if he rents out each short-term rental 30% of the month, he's in the gravy. He rents it out more than 40% of the month. He's in the gravy quite a bit. So all that rental income is going through the Spendthrift Trust. So again, capital gains, interest income, dividend income, rent rolls, and the last one is royalties. I have a client. He inherited his granddad's property. He's got in Oklahoma. He's got 6 oil wells on his property, making some good buck on that. You know, congratulations, my granddad. We sold his house in Pittsburgh. No oil wells there. I have they're together on this trust. It's 2 songwriters out of Nashville. The 2 songwriters, they're not married, but it's a man and a woman. They have 2 songs together, and then she's in one silo, he's in another silo. They both use the same EIN number, but it's under the trust. They didn't want to pay for 2 trusts. She, the female of the songwriters, has 1 song. 4 different country western singers have redone the song and put it out on the radio. I didn't know there was so much money in writing music. Congratulations to her. That's rentals. I'm talking to a publisher who works with people selling books. You know. Hello, I am Amazon international bestseller. I think we sold a book in Canada. Woohoo! So if I made any royalties on it, we're talking minuscule. We're talking a half penny or something. Just like how I have Amazon stock worth nothing. Woohoo! So again, if you're writing books or anything like that. Now, another thing that people are not aware of: the long-term capital gains. I'm purposely going after business brokers on LinkedIn. People who are helping people sell. I don't care if it's a deli, if it's a pizza parlor, if it's my first person who I worked with on this. If y'all know the home delivery, the Schwann's home delivery group, you know, those yellow trucks. When you sell your business, again, it's going to be either 15% or 20%. That's a lot of money. So just give you an example. It was a test case I did. It's 2 investors. They have 2 car washes in Ohio. They're going to sell them for a profit of $2 million. If it's at 15%, that's $300,000 in capital gains. They're selling it February 1st, 2023. They wouldn't have to pay that money until March. Whoops, I lied to you. Until April 15th, 2024. So yeah, it's down the road. Kick the can down the road. But $300,000. Where are you going to come up with that kind of money? So again, it's 2 investors, so let's cut it in half. Let's be honest about this. It's $150,000 for each investor. If it's at 20%, $2 million times 20%, easy peasy, that's $400,000. Or if we cut it in half, we're talking about $200,000 per investor. We had a meeting, that was Thursday before Christmas. I said, you know, we could have 1 trust, or each of you can have your own trust. Simultaneously, well, maybe not simultaneously, but quite honestly, quite a few, both of them said they want their own trust. When they heard how much money they could save because selling a business, you know, car washes. Who would think you have to pay capital gains on selling a car wash? I don't care if it's a pizza parlor, if it's a deli, if it's a hair salon, or any place else. When you go to sell your business, you're going to pay capital gains. One time, yes, only just one time, but this trust will go on and on every time. I don't know who Josh Thara is. I'm sorry, I'm not going to accept you on this because I'm getting off in just a few minutes because I have someplace to be at 10 o'clock. I was late, so I have to apologize. So again, my name is Sally Gimmon. I am the owner of thetrustisyou.com, YOU.com, thetrustisyou.com. I'm also going to be doing a podcast starting in January called Stop Paying Capital Gains Now. You can reach out to me. My email is stoppayingcapitalgainsnow at Gmail. I haven't checked it in several months because I haven't done anything with it. But if you go out to my links here on whichever site you're seeing this video on, if you go out to my link at thetrustisyou.com, you're going to download the slides I do every Monday night, 8 p.m. East Coast time. That is on Zoom. It's a live Q&A. I go over the slides, and then I answer questions people have. I'm not anti-American. I'm just trying to help people save money. Real quick, my story on how I got involved with the trust. Back in July of 2020, and my real estate group, my guru, or my mentor, Jay Tenenbaum and SETI, had the deal of the week. It was a bank-owned house, a reverse mortgage. A woman had died. They were trying to get the property off their books. Two different people could not come up with the $20,000, so I was the third person who did this. I got the contract. The contract said I paid $20,000 now, and then when the auctions opened, because of remember July 2020, middle of COVID, they had no idea when COVID was going to be over with. But when the auctions opened again, it had to be placed at $50,000. That's how the bank, and then my name would be put onto the house. So I had time to look at things. $30,000 in capital gains is almost $7,500. When it finally did go to auction, yay Sally, it went for $64,000. It's all in my slides when you go out to the Trust As You. I'm going to be honest about this. I made $44,000. I saved $10,500 because I had the property in the trust. Yay Sally. Again, I did have to do a little bit of paperwork. I'm in Arizona. This house is in Rocky Mount, North Carolina. I had to do 2 bill of sales. I'm just making up dates. Let's say August 1st, 2020, from my LLC, I sold the 11011 Hayward Street to me for $1 to myself. And then on August 1st, 2020, from myself to the trust, I sold the property for $1. I printed them, I got them notarized at the bank, and then I sent them to the attorneys here in North Carolina. The attorney contacted me. He goes, I need the first page of your trust. Can you send that to me? So everything was done in less than 4 days. Easy peasy. Let's call it 3 days. When we went to the auction, the money went into the account that is set up with the trust. I am not trying to say I'm great, but I got to save $10,500 on the first property that was in the trust. Trust me, I keep going forward with this. So if you're a real estate investor, you're a crypto investor, you're a day trader, you're a stock market investor, you're a crypto miner, you're an options trader, you're in FOREX, you're in Novatech, all of that, it can save you money with the Spendthrift Trust. I have to get going because it is the day after Christmas. Happy Boxing Day, everyone. I hope you have a beautiful day, and thank you for listening. I am here every week, hopefully on time next week, 9:30 East Coast time, to talk about how to save money with the business trust for 1099 people, and there's a beneficial trust for on all the different taxes. Take care.